inflation is impacting everyone, including farmers. Fertilizer prices up as much as 250%. Weed killers, seed, and equipment prices all up across the board. The big question, of course, how much will the consumer bear of these higher costs at the store? Joining us now for more on this is Mike Stranz, National Farmers Union Vice President of Advocacy, as well as our very own Yahoo Finance's Adriana Belmonte for this conversation. Mike, it's great to have you on the show. Give us a lay of the land over what input costs are increasing for farmers and what the plan is to mitigate those inflation costs.
Yeah, we're in a really unusual time in the farm economy right now as we see prices on the rise for basic inputs for growing crops like fertilizer, like pesticide, like seeds, like equipment. A lot of these costs have really jumped up in the last few months as we've seen the supply chain disruptions due to the pandemic, but also from some of the geopolitical issues that have been going on right now around the world and some of the uncertainty there. Farmers don't have a lot of choices when it comes to who they buy from and where these inputs come from. There aren't many choices out there. So they're really beholden to the costs that are dictated by those big companies that sell to them.
Hi, Mike. I wanted to ask you, how much is it that farmers make on the dollar for things that are sold in stores to consumers, from their products? And, how has that been affected by inflation?
Consumers certainly have felt the pinch from higher food costs at the grocery store, but farmers on average, for every dollar that a consumer spends at the grocery store, only about 14 cents of that dollar gets back to the farmer. And that's because of all the different steps involved, from marketing and processing and distributing those agricultural products and turning them into food products that you see at the store. This varies, of course, from product to product, but it goes to show how many companies are involved in the processing, how many different steps are involved between the farm gate and the dinner plate. So farmers don't have a lot of control over food prices. They're beholden to the companies in the middle, just like consumers.
Yeah, on that front, how much cushion do they really have, and how much of that has already been passed on to consumers? What are you hearing about the coming months and how much more prices may have to go up as a result of their input costs?
Yeah, well, one of the biggest problems for farmers is that they're price takers and not price makers. In rare situations, can farmers dictate the price for what they're able to sell? And they have to take their crops to a certain company or a certain distribution point, and the companies there have authority over what the price is going to be. So farmers don't get to decide what that cushion is. They have to make some real limited decisions between selling to one company or another. I think that as input costs go up, it really hurts our farmers because they've spent a lot of time, especially in the last 5 years or so, recovering from some of the trade war impacts that they've felt. And some of the market had just started to recover from that, but now the increased input costs are having an impact on the bottom line for farmers.
So I'm glad you brought up the trade war, because my next question is, during the trade war with all the tariffs, it seemed like soybean farmers were kind of among the ones hit the most, or hit the hardest, I should say. With inflation, are there any specific agriculture sectors that have been particularly impacted harder than the others?
Yeah, that's a good point. The soybean growers were hurt most by the actions with China back in 2017 through 2019 or so. But since then, with inflation, farmers who are really dependent upon fuel prices, so increases there hurt a lot. That goes for pretty much all row crop farmers, but the costs involved there, along with farmers who are dependent upon fertilizer. And the urea and markets, for instance, are highly dependent on some of the other, or are linked with fuel markets as well. So really for row crops, increased input costs are going to have a big impact here in the coming months.
And Mike, I want to ask, you're in Washington, D.C. right now. Is there anything that the White House or Congress can do to address any of these pain points for the farming industry? We know that subsidies have been used in the past during the trade war. Would something like that be helpful now? Because that might bleed down to relief for consumers as well.
That's been a priority for our organization. It's helping decision makers in Congress and in the administration identify some of those action items to help address this. And a lot of it comes from the concentration in the industry, where there's so few choices for farmers and so few contingency plans, I guess, when things run into supply chain problems. During the pandemic, for instance, in beef, we saw a lot of processing facilities and slaughterhouses shut down when workers became sick with coronavirus. And that had a rippling effect through the agriculture economy. So what we like to see is emphasis on having more and smaller processing facilities available in beef, in pork, in other parts of the industry, so that when there are shocks to the system, there's an ability to find other ways to process those animals or those crops. And then that won't have the sort of supply chain disruptions that we've endured the last couple of years. So we want the administration to put an emphasis on breaking up monopolies where they exist across the farm sector, and to make sure that farmers have options, whether it's for who they sell to or what inputs they buy.
So you mentioned a lot of the immediate shocks, particularly how it trickles down to consumers. Are there any long-term implications that can happen for farmers specifically as a result of inflation?
Yeah, there's as changes to the kind of the business model, I guess, start to come into play. If we're going to see like a new price plateau for some of these inputs, as inflation happens across the economy, but it happens at different rates for different particular commodities or inputs. So if we end up in a new price plateau for one thing or another, that might have longer term effects. But I think with the longer term aspect that really comes into play the most is if other companies, there are so few companies available to sell inputs as it is right now. If some of those get acquired or are broken up or are bought up by other companies and absorbed, having fewer choices is going to have a really painful effect for farmers as the years go on.
Mike Stranz, National Farmers Union VP of Advocacy. Appreciate you joining us today. And our thanks to Adriana Belmonte as well for joining in on the conversation.